When paired with a high-deductible health plan, HSAs allow you to keep the just-in-case money that you would otherwise dish out to your insurance company through high premiums. But HSAs are not just an alternative to high-premium health plans. They are an unmatched retirement savings vehicle. Sure, 401ks and IRAs offer tax-free contributions and growth, but they don't allow tax-free distributions. Roth IRAs offer tax-free growth and distributions, but not tax-free contributions. On the other hand, FSAs do offer the triple tax advantage for qualified medical expenses, but they are owned by your employer and have a use it or lose it policy, which means they don't roll over annually. That is why HSAs are king. They offer tax-free contributions, growth, and distributions. They are owned by you, and they roll over from year to year. No use it or lose it policy. In addition to all these benefits, HSAs can be invested to promote even faster growth. Conveniently, MotivHealth provides in-house investment resources to help you prepare for the future. Why invest? Investing in your HSA is one of the smartest financial decisions you can make. HSA funds can be invested tax-free in mutual funds, stocks, or bonds. Of course, it is always wise to set aside a set amount of HSA funds for short-term, unanticipated healthcare costs. Investing in your HSA not only produces rapid growth, but better growth. When your money sits in a bank account, you may receive 1 or 2% interest. But when you utilize the investment funds that, for example, MotivHealth grants access to, your savings can grow exponentially. The time value of money states that the money you have now is worth more than its identical sum in the future due to its current potential earning capacity. There's no limit to how much your investments can grow. For example, if a family invested their maximum annual HSA contributions over 30 years at an average 7% annual rate of return, they could accumulate near $1 million in savings. Now that it's obvious you should invest your HSA, how exactly do you go about doing so? For one, MotivHealth members can invest their HSA funds at motivhealth.com/HSA-investments. To qualify for investing at MotivHealth, you need to accumulate at least $2,000 in your HSA. Once you reach that amount, you are free to invest anything over the $2,000 balance. Once you've invested, you don't have to maintain a minimum balance of $2,000 to keep your investments. But it is important to note that you won't be able to make any new investments until you reach a $2,000 balance once again. Note that your investment balances cannot cover claim payments or purchases with your MotivHealth HSA debit card. To use investment funds for such payments, you will first need to sell your investments. Time is money. Start investing your HSA ASAP, and you'll be sure to thank yourself when retirement arrives. After age 65, HSA funds can finally be used for non-medical expenses. It really seems silly not to invest funds that allow tax-free growth, don't you think? Participating in MotivHealth investments deducts a monthly fee of $3.95 from your HSA balance, and these investments are not FDIC insured. HSA funds used on non-medical expenses after age 65 are subject to income tax.